There is a lot of confusion regarding the recently launched central bank digital currency and how is it different from UPI. Also last year, a E-Rupi initiative was launched by the government, and this is adding more layers to the confusion that is already existing. Hi, my name is Vikas, and in this video we'll try to understand the difference between CBDC, UPI and the DBT specific E-Rupi. I've already made a video on E-Rupi. If you haven't watched it, please go back to the channel and watch that video. What is the scope of this video? We'll be trying to understand CBDC or the digital rupee and how does it fare against UPI in the terms of technology, the purpose and the feasibility in Indian economy. But before that, let us understand some basics. When you take money, you can divide it into physical and digital form. When you pay the taxes, it is called white money, and if you avoid the taxes, it is called black money. On 8th November 2016, something called demonetization happened, and the main purpose with which it was brought out initially was to eliminate this black money. However, according to RBI's data, cash is still the king, and 99.9% of the cash has re entered into the economy. And in fact, the amount of money that is in circulation has increased according to the latest RBI data. Now, the other end is the digital money that we are talking about. Now, what does it mean? It can be in the form of net banking or the money that you transact using your net banking account. It can be either HDFC, ICICI, SBI, etc. Also, there are a lot of e-wallets. For example, something like Paytm. Now, here you might get a question. Can we consider even UPI as digital money? No. UPI is just a platform or a software provider. It is just an enabler of digital payments. This is not different from CBDC. CBDC is actually a digital currency. This is an enabler. This is a actual digital form of currency. Now you might get a question, how is it different from 1 and 2, that is net banking and wallets like Paytm, PhonePe, etc. Let us understand. Quick stat, 92% of the global money is in digital format only. That means only 8% of the cash is in the form of hard cash. RBI is considered to be the master ledger for all the transactions that happen in an economy. Let's say a person X has an account in SBI and a person Y has an account in HDFC, and the respective transactions between them are recorded in their ledgers, SBI's ledger and HDFC ledger. When you combine all such ledger, you will have it under the RBI's master ledger. Ledger is basically a record book of all the transactions that are happening. But the problem here is, let's say for example, whether you use a UPI or you're directly going to the bank or an ATM and withdrawing that money, you just can't track what a person does with that money. He can use it to buy drugs, he can use it to buy weapons. It is simply not possible to track that. This is the problem that CBDC wants to address. But before understanding CBDC, we have to understand its origin. A lot of us know that CBDC's origin was based in the concept of cryptocurrency. But you have to know the purpose with which cryptocurrency came into existence. If you take a look at this screenshot, you will see, let's consider this to be a screenshot of Book My Show. You want to watch a movie, you want to book a ticket. Here you see something called internet handling charges, which is charged by a website like Book My Show. Over and above that, you will also have to pay taxes. So in a transaction between you and a theater to watch a movie, you're almost paying 50 rupees more, 50 to 60 rupees more to a third party like Book My Show. So in order to eliminate third parties like this, someone came up with the concept of cryptocurrency wherein there is no need for any third party to authenticate this transaction. And that cryptocurrency is based on a technology called blockchain. So we have to understand what blockchain is to understand this CBDC. Let us try to understand that. A ledger is a book of all the recorded transactions. These transactions can be stored centrally with one organization, let's say RBI. So here, whatever may be the bank, it can be HDFC, ICICI, or it can be SBI. Whatever transactions are happening, they have their own individual ledgers, but they will be collated together and be held centrally by RBI. But the problem is, anyone can manipulate this data. If a transaction is happening between two parties X and Y, RBI has the power to manipulate this data. Of course, it is not going to do that, but in a different scenario, in the case of Book My Show is a third party application that is connecting the theater with the audience and is charging a fee for that. Here, it's quite possible that this Book My Show can become redundant if we find a way out. So, this is what a distributed technology can do. So, distributed ledger technology is based on something called blockchain. How it will avoid a third party like Book My Show or an RBI, which is the centralized database, is by maintaining blocks of data which are connected to one another. And it is like if a piece of data is pushed with respect to one transaction, the same copy will be copied in this also. So it is like a network of computers which will be connected together, and the same copy of data is copied in the next block as well. So it is literally what it means. Blocks of data are connected in a chain, and they all will be having the same set of data whenever a transaction happens. So this way they ensure that transparency problem is taken away. Book My Show is acting as a middleman because it is so possible that the theater might cancel the show and the audience might not get the money back. That problem is solved through blockchain because it is transparent in nature. So this transparent network will authenticate by itself all the transactions that are happening on the network. So using this blockchain technology, cryptocurrency came into picture. Because of low transaction costs and because regulation is avoided, like a government authority like RBI will not be intervening, cryptocurrency became very famous in rich individuals. Bitcoin is the first cryptocurrency that came into limelight, and people started hoarding bitcoins because these cryptocurrencies, though they are not actually currencies, if two parties, let's say X and Y, accept that they will accept bitcoins between themselves, there is no need for a third party intervention like that of an RBI. So it is basically a barter system by using bitcoins. If this trend increases, the value that RBI brings to the table, that is stability in the economy, will be vanishing. So RBI does not obviously want cryptocurrencies to come into the picture because it is highly unregulated and it can be used for uh, wrong purposes like terrorist financing or procuring weapons, etc. So the answer to this problem was CBDC, that is government's own technology based digital currency. To understand the difference between the CBDC and cryptocurrency, you have to know two terms: fiat currency, legal tender. Let's consider a 10 rupee note and a gold coin. Gold coin has some underlying value, but a 10 rupee note is just a paper if the government does not recognize so. Government, by recognizing that as a fiat currency, gave it some value without having any intrinsic value. So it is a fiat currency. Now it is also a legal tender. What does it mean? A citizen cannot deny this 10 rupee note as a mode of payment because it has some legal sanction also. Fiat currency will gain a legal tender status by recognizing so, but a cryptocurrency will not get any such recognition. The only value it gets is by the scale of community participation. In the previous example we have discussed, let's say X and Y, that is the theater and the customer wants to bypass this Book My Show, and directly interact with each other with minimal cost. Here, if they apply a technology like blockchain, which authenticates itself, then they don't need to pay such high internet handling charges, right? Similarly, in a cryptocurrency, if more and more number of people accept it, community participation increases, then the value of that cryptocurrency increases. But this is creating a problem. People are trading in cryptocurrency and a lot of frauds are happening and people lost their money. Therefore, centralized agencies like RBI came into the picture and started regulating them. So CBDC is to benefit from this technology of blockchain and stop the menace of cryptocurrency. They basically wanted to reduce the transaction cost through this CBDC. Now let us understand how it works. For prelims examination, these FAQs are extremely important. First one is it a new currency? Of course not. You're not trying to increase the supply of currency because that will lead to inflation. So this is not new currency. It is just a digital format of currency on a technological platform. So is new money added into the system? Obviously not. I've just explained the same thing. But then how is it different? It just looks like digital cash. How is it different? That is what we have to understand. You know that UPI is actually a product that was developed by a company called NPCI. Here, you just scan a QR code and make the payment. So it is also trying to achieve the same objective of CBDC by going digital. So this is also a form of digital money only. Then how exactly is it different? Remember that when we were discussing about CBDC, it came with the inspiration of cryptocurrencies. And cryptocurrencies came with the intention to reduce the costs involved in transactions. I gave you the example of Book My Show and a person X and the theater owner. This Book My Show is acting as an intermediary which is charging money. You extrapolate the same logic to a centralized body like RBI, there would be some transaction costs. Similarly, UPI is acting as a platform or an enabler by making these digital transactions very easy. But you have to remember that the success of this will dip when government starts charging money for using this technology. Right now, the government is paying a huge subsidy to the people to use this free of cost. So NPCI gets money from the government for creating this UPI. Now, what if that is completely eliminated by the help of a technology like blockchain? So, RBI wants to use this blockchain to ensure that this transaction costs are removed. They no longer have to pay this subsidy cost to NPCI for using this UPI. That objective can be fulfilled by CBDC. UPI will still need a bank to ensure the success of this model. Here, RBI will directly issue a wallet to a user, and that user will have money in that wallet directly without any third party intervention. So, this is the advantage that this technology has. But there are some risks associated with this as well. You are basically trying to remove the entire banking system. If you understand the concept of money multiplier, you know what risk I am talking about. If you don't know, let us discuss. In a normal scenario, let's say a person X has 100 rupees. This person goes to a bank and stores that money in the bank. Now, how does a banking model work? This 100 rupees is used by the bank and it will lend it to another customer Y and charge 10% interest. So it is making 10 rupees profit on this transaction completely. So this person gets 4% interest, that is 4 rupees, and the rest 6 rupees is kept by the bank itself as a profit. Now here comes the fundamental question. Why are we storing our money in a bank? Because it is physically impossible. There will be a lot of security issues to store this in your house. What if there is some theft and the entire money is stolen? So for that reason, we are using banks to physically store them in some location. But with the present RBI's CBDC, that entire need would be removed. So how will you ensure that this entire lending activity will happen, because there is no incentive for people to store or use banks. There is absolutely no need at all. So this will disturb the money multiplier concept. What is this money multiplier? As and when this lending activity increases, economic activity increases. Now, with the absence of this money multiplier concept in picture, entire banking system is removed. All the third parties are removed. How will economic activity be generated? If there is no interest in the economy, how will it generate new activity? How will you circulate the money? So this is a serious challenge to the success of this CBDC. We are yet to have a clarity on how government wants to proceed with this. We should wait and see for official clarification from RBI. I hope you understood the concept, the purpose with which it is created. Now let us see a related concept called E-Rupi, which was brought out by RBI last year itself. This concept of E-Rupi is completely different. I made a video on this previously. There is a speculation that the government wants to use this CBDC or E-Rupi, that is digital E-Rupi, not the RUPI one, this rupee, to ensure the success of direct benefit transfer by transferring cash into the wallets of the users. But you have to understand how our system evolved with respect to this direct benefit transfer. We have invested heavily on Jandan Aadhaar mobile trinity. We opened bank accounts, we linked our Aadhaar cards with mobiles, and ensured that they are linked to the bank. This is a very tedious process that has been going on since 2015. Now, with such a successful model and a lot of money and energy invested into this Jam Trinity project, it is unclear why the government wants to move ahead with this E-Rupee, if it ever wants to move in that direction. So we need more clarity from RBI on that front. Right now, the official reason given by the RBI's concept note is that it wants to reduce the cost of management of currency. However, it is yet not clear because blockchain is a very energy intensive process. Another issue is that of centralization. You can see that banks are completely wiped out from the scene, the power is taken away from them, and there is no concept of interest in these transactions. You are basically removing third parties like banks and also third parties like Visa, MasterCard, etc. The payment gateways and other financial companies will be wiped out from this. So, is it worth it? And what is the fate of this E-Rupee project that was launched last year? All these questions remain. So, we have to wait for RBI to come up with more explanation on this front. I hope you found this explanation useful. That's it for now. Thank you.